prospects for future demand and production levels appear to be at the forefront in guiding the market sentiment and oil prices. In this report, we aim to shed light on the factors driving WTI's price and assets future outlook. China's industrial production came in lower than anticipated on a year-on-year basis for May, adding to China's trade balance, whose since last Wednesday. The continued deterioration in the world's larger oil gasoline giant appears to be taking a heavy toll on demand for oil, as it appears that China's initial reopening momentum appears to be rapidly losing momentum. Furthermore, in an attempt to recover previous growth rates, the People's Bank of China reduced the rates on their own year loans after lowering their short-term rates earlier this week. The reductions appear to be aimed at rejuvenating ailing industries such as the property industry, which plays an important role in China's economic activity. In addition, the State Council, according to Bloomberg, is expected to discuss further stimulus packages aimed to boost the ailing industries and increasing consumer spending in the economy, in an attempt to boost economic growth. In conclusion, financial releases stemming from China paint a worried picture for the global demand of oil, as the world's largest importer of oil appears to be experiencing a decline in economic activity, thus potentially weakening demand for oil, which in turn may be driving oil prices to lower ground. Oil traders may have been hoping that a hawkish pause by the Fed would have supported oil prices, as the pause may provide some breathing room for oil markets that have been feeling the burn from lower oil demand due to reduced economic activity. However, it would appear that despite the Fed's remaining on pause during yesterday's FOMC meeting, oil prices still moved lower, as the hawkish outlook by Fed Chair Powell seemed to take their spotlight after stating that rate cuts are a few years out. The statements made by the Fed Chair seem to have weakened the resolve of oil traders, as the news around the economy does not appear to be loosening anytime soon, but may rather further tighten, thus hindering potential growth, which may have decreased demand for oil, which in turn could have reduced oil's price. The OPEC monthly report was released on Tuesday, which stated that the world economic growth forecasts, in addition to the world oil demand, have both remained unchanged. The report also seems to be contradicted market worries of a recession, as it is predicted by the group that oil demand from China is anticipated to rise from 800,000 barrels per day to 840,000 barrels per day, which may support oil's price through increased demand. Furthermore, global oil demand appears to have remained the same as was mentioned above, with global demand expected to rise by 2.4%. Lastly, the report highlighted that the group reduced oil production in May, which reflected prior output cuts pledged made by members. Overall, the monthly report appears to have temporarily supported oil's price at the time of its release, yet the statements about rising uncertainties regarding global economic growth seem to be evident amongst oil producers and traders and may have hindered potential oil gains. Thank you for watching.